Welcome to Finance Fuel. In today's explainer, we're simplifying wealth building down to its absolute basics. And we're going to kick things off right now by completely shattering a massive financial myth that, frankly, holds way too many people back.
So, do you need 10 grand just to get your foot in the door? Most people honestly believe investing is some exclusive private club that's only for the rich. But I'm going to show you exactly why that assumption is completely 100% false.
What if I told you that just $100, yeah, a single crisp $100 bill, can literally be your very first step toward building real, lasting wealth? You absolutely do not need a fortune to build a fortune. You just need a starting line, and, well, this is it.
Today, we're breaking down a super simple 5-principle blueprint to get you started today. We'll cover starting early, investing consistently, diversifying, thinking long-term, and keeping your financial education going.
Principle number 1, start early, because time is actually your greatest advantage.
Having time on your side is a way bigger advantage than having a massive pile of cash. And the reason for that is compound growth. That's when your investment earns returns. And then those returns, they start earning their own returns. Think of it like a snowball rolling down a hill. Your initial investment grabs a little bit of snow, but as it keeps rolling, it gets bigger and faster all on its own.
To put that into perspective, imagine two people. We've got Sarah, who starts investing just $100 a month at age 20. Then we have John, who waits until he's 35 but tries to catch up by investing $300 a month. Even though John is shoveling 3 times the cash in every single month, Sarah could actually end up with way more money by retirement. Why? Because she gave that compound growth a 15-year head start. The lesson here is crystal clear. Time is your ultimate secret weapon.
All right, principle 2. Invest consistently and focus on your habits.
If time is the engine, consistency is the fuel. Look, so many people just sit on the sidelines waiting until they have thousands of dollars saved up before they even think about investing. And that is a huge mistake. Building the habit is what actually matters. Whether you decide to invest $20 every week, $50 a month, or just $100 whenever you have the extra cash, taking consistent action is what builds a solid foundation.
The best part, regular investing over time reduces the impact of the market's ups and downs. It stops you from trying to guess the perfect moment to jump in. The market goes up, the market goes down, it's totally natural. But when you invest steadily, you smooth out that bumpy ride.
Moving on to principle 3, diversify. Do not put everything in one place.
Now we need to talk about protecting that hard-earned $100. Diversification is really just a fancy way of saying, don't put all your eggs in one basket. Imagine putting every dollar you own into a single company. If that one company tanks, your entire investment goes down with it. That is incredibly risky. Instead, smart investors spread their money across different assets, things like stocks, ETFs, bonds, crypto, and even just holding some cash.
By using a mix of these different assets, you make your portfolio far more resilient. Now let's be real. Diversification doesn't just magically eliminate all risk, but spreading your money out acts like a giant umbrella. It keeps your portfolio strong and acts like a shock absorber when the market weather gets a little rough.
Principle 4, think long-term and avoid emotional reactions.
This is where we have to talk about human nature, because reacting emotionally is probably the biggest mistake beginners make. When markets rise, people get this huge rush of excitement and just buy blindly without a plan, usually right when prices are at their absolute peak. And then, when markets inevitably dip, they panic and sell everything out of fear, locking in their losses.
To survive and thrive, you've got to stay disciplined. You need to focus entirely on your long-term goals instead of obsessively checking daily price movements on your phone every 5 minutes. Long-term investors simply do not let fear or hype drive the car.
And finally, principle 5, keep learning, because knowledge is your best asset. The absolute best investors in the world have one major thing in common. They never stop learning. You should regularly spend a little time figuring out how markets actually work, brushing up on basic investing concepts, looking into different types of investments, and understanding how risk affects your decisions. Keep learning, and make it a habit to regularly review your investments to make sure they still line up with your life goals.
All right, let's bring the whole blueprint together. 1, start as early as you can. 2, invest consistently, even if it's just small amounts. 3, diversify to protect yourself. 4, focus on the long term and ignore the daily noise. And 5, never stop learning. You really don't need to be wealthy to begin, you just need to take that very first step. I want you to walk away from this explainer ready to take some real action. So here's a provocative question for you to think about. If you had $100 to invest today, right now, where would you put it and why? Drop your answers, start a conversation, and take that step to fuel your financial future.
Before we wrap up, just a quick reminder that this explainer is strictly for educational purposes. You should always do your own research and consider your unique situation before making any investment decisions. Thanks so much for hanging out with me today. This is Finance Fuel. Fuel your financial future. See you next time.